Hello, my name is Russell Myers. Welcome to Issues Unite. All right, so the Federal Reserve is still pumping money into corporations. And as of this time, the Federal Reserve balance sheet exceeds $6 trillion. And that does not include the fact that they just announced a something like $2.3 trillion program where they are buying up corporate and municipal bonds. And the Federal Reserve has not historically invested in municipal bonds. They may have bought state bonds, but not municipal. So they will be buying bonds from any city with over 1 million population and counties with over 2 million in their population. So, that's leaves out a lot of cities. Like Albuquerque has got about 600,000 in the county. And yet it's the largest city in the state. And the creation, they're doing this with, created money. There's nothing backing it. Meanwhile, the oil prices still remain low. Every bit of oil that is being produced at a loss and subsidized by the government. So we're pumping more and more money into the oil companies. And for what? So that, investors can make their money. So why is the stock market still creeping up? And why did it go from 1,600 point rise on Monday and then to 200 points a day, something like that? All right, so basically what happened here was that the flood of money going into the corporations, the flow of money went from a flood to kind of a steady stream. So why are people still buying stocks? Why are investors still doing this? Because they're still getting paid dividends. But the only reason they can get paid dividends is because of the flow of money going to the bond market by the government. If the government stops paying out and buying up bonds, then there's no liquidity and dividends come to a halt because there is no liquidity. So I've been saying that we're going to start seeing a flood of bankruptcies, corporate bankruptcies. So what happens in the case of these bankruptcies? Well, in the case of Chapter 11, which is reorganization, the first people that get paid out are the secured creditors, such as usually the banks. The second ones that get paid out are banks, bondholders, and suppliers. Last to get paid out are the stockholders. They only get paid out what remains if the secured and unsecured creditors leave anything to be paid out. If the debts exceed what the secured and unsecured debts amount to, then stockholders get paid nothing. Now, I've pointed out before that these loans from the government are loans. They still have to be paid back. The bonds are also debts that have to be paid back. So what we are going to see is a flood of Chapter 7 bankruptcies. Chapter 7 bankruptcy is dissolution, complete cessation of business by that corporation, which is going to happen when corporations take a look at all of their debts, their loans, including 0% interest loans, their bonds, and stockholders, etc. When they take a look, but mostly suppliers, banks, and bondholders, when they forecast out that the economy has become so bad, such as when the dollar becomes devalued, which is coming, it is coming, then, there's not enough workers, there's not enough consumers with enough money to spend on their product or service, even if they reorganize. Continuing operations means that they will still have more debt than profit. So it would take them years, or they may never come out of debt, in which case they will file Chapter 7, complete dissolution. Under Chapter 7 bankruptcy, only secured creditors get paid. Now, that is mostly the banks. Now, some suppliers can have secured debt. They've provided goods, or especially durable goods, that they have an agreement in their contract that they are a secured creditor and the corporation has to pay them out. Bondholders and stockholders lose everything. Your bond, your stock is completely worthless. Doesn't matter that you are considered a creditor of that corporation, your investment is a complete loss. And we're coming to that where a lot of corporations are going to wind up declaring Chapter 7 bankruptcy. And this is why I've been telling people, pull your money out of the financial market and start buying physical precious metals, etc. Not buying into some account, which those precious metal investment accounts, you are investing in thin air. Don't do that. You need to buy the actual physical precious metal. If you buy enough of it, you need to put it in a safety deposit box. And, hope for the best from there. So, we're going to see this start happening. We have, over 30 million people that have declared unemployment within the last 2 or 3 weeks. And that number is going to keep escalating. The more that more states continue to go on lockdown, even Alabama has put limits on what businesses can stay open and which ones cannot. And Alabama's as red a state as you can imagine. Hair salons and tattoo parlors and jewelry stores. No, clothing stores, high-end clothing stores, no, they're all closed. So this is going to continue on, and we have no idea for how long. Yeah, so if you still have money in a 401k, in a stock or profile, in bonds, I really advise you to pull them out now. So, you can ignore what I've been saying and what I'm saying now, but so far, everything I've been saying has been correct. I said to buy supplies before the store shelves went empty. I didn't foresee the toilet paper thing, but that's just weird. That one shocked everyone, pretty much. But as far as dry goods and so forth, I said, buy these things. And I said the stock market was going to fall. The stock market fell. And so I tend to be pretty correct on a lot of things. Of course, there are some absolutely vital corporations that won't absolutely go under. The largest oil companies, the utilities, so forth. And, you can buy on municipal bonds, but it's, when you'll get paid, that tends to be a question. That is a long-term investment. So as far as stocks, I wouldn't be buying any stocks in anything right now. I'd be liquidating all my stocks. So unless you are willing to take the risk and hold on to those stocks long term, it's time to pull it out. You better be in a financial position that you can part with that money. For a long term. But unless you're secure enough that you can just keep that money in there, you need to pull it out now. All right. So anyway, we're still going to keep on seeing the next bailout, just like the first bailout, is going to help the rich far more than it helps you. That $1,200 isn't going to go far. The unemployment, that depends on how much you were making before, but how long it goes on is deeply in question. So please, think about your future, and stop crying about if you pull money out of the stock market that you've lost part of what you put in. You need to think about whether you lose all of it. All right? I'm not saying any of this as propaganda or anything like that. I'm trying to tell you in your best interest. I've got nothing to gain by any of this. Right? I'm not selling anything. Most I'm asking for is $1 a month to help me expand the channel. All right. So that's going to be it for this one. I hope you have a good day. Like I said, if you can, donate $1 a month to help me expand the channel. I'm putting my PayPal link below, and I will talk to you later.